Barack Obama says he's reflecting on the elections, but how will the markets reflect on the new balance of power? Today, not much, although we are at year highs. To the Fox Biz All-Stars, Johnny Honig, Mike Norman, and economic and market analyst Francis Newton. Francis, what are those markets saying?
Well, I think the markets are technically due for a correction, Neil. We're up, 1,250 points on the Dow from the last time we tested 10,000. However, with quantitative easing coming in, I think we're going to see some new liquidity coming in. So if the Dow cannot close above 11,250, I say 10,625 and maybe even 12,500 before we really see problems.
In the bigger macro sense, Jonathan, are you encouraged or worried that we were buying on the rumor, getting a little bit cautious on the fact?
Well, I mean, Neil, a lot's impacting the markets right now. The president and the political situation is an important part of it. It's not the only part of it. We mentioned quantitative easing. That's one of the elements. Another big one that I think is beginning to factor into how the markets are acting are these essentially systemic branches of the government now, like Freddie, like Fannie, like the Federal Reserve, which really are playing a big part into how people allocate assets. People are sick of sitting on money markets, literally earning nothing, so they're willing to take some risk. So I think the comment is very spot on. As long as you're earning nothing in the bank, people are putting some feelers in the water and taking on some risk in the stock market.
Are you bullish?
You know, right now I think it's kind of an unclear look. You said something interesting just before we came into this.
I do.
You do, more than occasionally. But before we came into this segment, you said, look, this big promise to cut spending, Republicans take over the House, market was unimpressed. Why? Think about that for a second. This promise to cut spending, and I would say that's sort of the mood in the country. That's what swept these, new leaders into office. This is the thing that worries me the most, because in an environment, in an economy where we're really suffering from an acute shortage of demand, if the government now starts to cut back, I think that kills it.
What do you think of that, Francis, that with the best of intentions, Republicans make it worse?
I completely agree, Neil. In 1937, the Dow Jones had gone up 5 years after it crashed and bottomed out in 32. They cut spending in 1937 18%, right, and again in 1938 10%, and the market crashed again.
Right. Wow, so Jonathan, bad times could be happening here.
No, Neil, the most successful markets have always been the most free. Even today, the president credited free markets with the nation's prosperity. Government spending, he talked about encouraging business. The best encouragement he could do wouldn't be to spend the people's money, but to let the people be productive and get out of the way.
Look, the government spends, it adds to GDP, it adds to incomes, it adds to demand in the economy.
So you choke that now, you're doing it at the worst time.
If you choke it, you're doing it at the exact worst time. Exactly.
And that's right. And now we get back to our old age-old argument, Mike, with why the value of the dollar continues to fall.
Please, if you talk about the dollar, I will kill you.
But let's remember, the spending is always debt.
So what's going to happen, Francis? We're going to hit some bumps, right? That's what you're saying.
We are going to hit some gigantic bumps.
And that's what you're saying. If we pursue this policy, we're going to hit gigantic bumps.
Listen, it could be a Reagan situation where what if the Republicans don't cut and they cut taxes? You get like a double dose of stimulus. That's why we don't know yet.
John, final word?
The hottest markets in the world right now.
Regardless of anything, the spending is ultimately debt. And when the debt comes to call, the money in circulation will be cut substantially, and we will have a shortage.
Well,
and
thank you, John.
exactly what happened in the Depression.
But great job all. Sorry we're so tight on time. We'll see you tomorrow.